even with the volatility, because risk adjusted, even if you take from drawdown adjusted, volatility adjusted, whatever ratio, still the best risk adjusted reward of any asset we've ever seen. We have never seen anything like this. So regardless of what people say about the volatility, everything else, the risk adjusted return is like an alien asset. We've never had anything like this.
As an investor, you traditionally hold part of your portfolio in precious metals like gold. This provides a hedge against losses that stocks might incur during a downward economic trend. This method has proven effective and continues to be effective, but a new alternative challenges this old-fashioned method of capital preservation. Bitcoin is proving to be an attractive asset for investors because it has been around long enough to be recognized and supported. It is used in a way that seems to demonstrate certain tendencies. Cryptocurrency markets fell, as did other risk assets after the Federal Reserve reiterated its cautious stance on the pace of future interest rate cuts. Gold has outperformed, which could benefit Bitcoin, Coinbase said in a recent report. In today's video, we will tell you Raoul Pal's view on Bitcoin, as he says Bitcoin will outperform all other assets, including gold. But before we get into the video, make sure you subscribe to our channel and press that bell icon to never miss an update. This debt problem has led to more money being printed, the devaluation of the currency. People think that there will be inflation, that is, the price of the CPI will increase, but in reality, this is not the case. It is much worse if wages do not increase, but assets increase because optically, you devalue the currency. Your future self becomes poorer because assets are used to store wealth for deferred consumption in the future. But what happens is you can't afford that much money now, so your future self is, in fact, poorer. So there's no real way to move up the ladder. The stock market is much more expensive. Their participation rate in the S&P is much lower. In this case, the benefits that your parents had are no longer available to you. So that's a problem. A problem for society in general is the issue of currency depreciation. Governments do this because there is no way to pay the debt. So what you're going to have to do is continue to print money. Since 2008, they have readjusted interest rates. It's like a debt reset. The debt jubilee has taken place. Everyone had the option of not paying interest, and everyone repaid their debts within 3 to 5 years. All assets are now incredibly correlated to this cycle, whether it's emerging markets, the dollar, rates, cryptocurrencies, gold, stocks, everything. So, if we have a super correlated environment where asset prices continue to rise due to currency devaluation, that's the optics. Because the value of currency is falling, then your job is to find something to make up for it. Thus, the rate of degradation is approximately 15% per year on a global scale. Now, stocks have done something that's not very far from that, but it just means you're not actually making money. You're actually standing still. The Nasdaq, which follows a secular trend, has actually exceeded that 15% benchmark to some extent. So that really helped. The traditional way of doing this would have been gold. But gold has not resisted global depreciation particularly well in recent years. It still works wonderfully as a global currency and against global devaluation over time. Cryptocurrencies offer several ways for the financial system to use them. In an over-indebted system where you have collateral and 30 uses of those same collateral, no one owns anything. You own a fraction of what you think you own in a debt-ridden system. The same with the bank. You have money in the bank. It's not your money, it's the bank's money. And this has been proven time and time again. So we have a broken financial system, and the blockchain rails are actually very useful. We can know who owns what at any time thanks to instant payment. Therefore, this reduces much of the risk of sedimentation of the layer. But this also gave birth to cryptocurrencies, which also have this dynamic of supply and demand, which is interesting. The supply is limited and has the properties, in some ways, of digital gold, and it has worked very well if you look at it, because you have this adoption of blockchain technology on top of this store of value or this collateral layer. It has far surpassed everything, so that's been a phenomenal asset. Gold is falling relative to the Federal Reserve's balance sheet. This is more of a temporary situation than a permanent situation. When you have the technology and the gold, call it storytelling, you will always do better. If you are 65 years old, gold is doing a great job for you. If you're 35, you're not going anywhere. You have to earn wealth, not just protect it, because you don't have it when you're young. And that's the difference here. There is a fit factor for different types of people, and you are trying to solve different problems. Bitcoin mining itself has created opportunities. So what you're seeing is that the networks, as they gain in adoption price, they're going a little crazy. Now in 20 years, will the price of Bitcoin be this crazy? This is very unlikely, as it is maturing and more like a mature asset, so people are confused. What we're doing here is saying what the price of Bitcoin is doing is saying, yes, there's the mimetic element. It has this low value. Nothing is missing in the digital world, so it's interesting for humanity. It's not proven, it doesn't have 1,000 years of history. It's interesting. It also has interesting properties on how to reuse wasted energy or rebalance energy loads. It would have seemed a year ago that the Bitcoin blockchain is not very useful, but now we have started to see these ordinals and inscriptions, which use the blockchain for other purposes. We are seeing other use cases of layer 2 built on top of Bitcoin. There are more incentives in a network. The more people invest in it or join to create other use cases, there is money there. There is money to do things with. So we don't know what the future of the Bitcoin blockchain is, but if it attracts enough money, it will create other use cases because it's a network with a lot of people on it. So the value of the network is a strange thing for someone who doesn't live in the digital world. In the digital world, this is what created all the value of Amazon, Google, Apple, and Facebook. That's what creates value at Tesla. That's the value in ChatGPT. That's network effects. So we have this incredible asset with rare properties that solve the problem we have in the digital world. It has certain physical properties because of what we can do with electricity and how it is extracted. And then it has the expected future value of the network. Now the question is, will it exist in 50 or 100 years? No one knows. Would humans use gold in 100 years? No one knows. Just because they used gold yesterday doesn't mean that they will use gold tomorrow. Then everything changes. People use cowrie shells, they use stones, they use all kinds of things as a store of value. So don't take anything for granted, but observe. When new things come along and we see people using them in different and unique ways, attention is paid, and that creates a lot of value. Because here we have two elements. We get a store of value along with the technology adoption that drives it. Bitcoin technology is a good thing for humanity. It has investment properties that surpass other assets. Even with risk-adjusted volatility, even when factoring in adjusted drawdown adjusted volatility, regardless of the ratio, remains the best risk-adjusted reward of any asset we've seen. Bitcoin, whose risk-adjusted return is foreign. We have never seen anything like this. So no matter what people say about volatility and everything else, risk-adjusted value, the return is like an alien asset. We've never had anything like this. It's the best macroeconomic opportunity there is. We have the best risk-adjusted return asset, which has the highest return of any asset in history. This all looks like the NASDAQ, and you're probably a NASDAQ bear as well, but all of these things are secular trends on a logarithmic chart because they are secular trends. They are not cyclical. If we saw fewer people using it, there was less activity, fewer value transactions were being made, and fewer new people were joining the Bitcoin network and owning wallets. If this persists over time, the network may not work. And we've seen a lot of these things happen in the past. It is possible for this to happen. That's all for today. Let us know your views in the comments section below. And don't forget to like this video before leaving. Thanks for watching.